Welcome to DeFi panel, which is going to explore how the hell we will allow in the European Union and the world this innovative organizational structure to take place for the benefit of consumers and for the benefit of the financial markets. I'm very pleased to have you all here because after 2 years of COVID restrictions, it's very nice to be live together discussing. And I would like to thank Robert Kopitz and Blockchain for Europe, not only for this panel and this event, but also for their contribution to the ecosystem in the European Union and for their immense help of bringing know-how from the side of the industry closer to the regulators. And let's start our panel. Before starting with questions in our conversation, I would like to give 2 minutes to each of the participants to introduce themselves and what they are doing into their respective companies. Let's start with the lady of our panel today, Rebecca.
Thanks so much. Thanks for having me. Thanks to all the attendees. I'm sorry I can't be there in person. I'm Rebecca Rettig. I'm the general counsel of the Aave companies. We're a group of software development companies that build open source blockchain-based software. We built the Aave protocol, which is one of the largest blue chip DeFi protocols out there. It is decentralized and run by a DAO. And then we've also built the Lens protocol, which is one of the first decentralized Web3 social media protocols out there. Prior to joining Aave about 2 years ago, I was in private practice as a partner law firm in the United States, mostly advising DeFi companies on regulatory issues, structuring, token launches, all of that. And in addition to my work here, I'm also on the board of Silvergate Bank, which is one of the largest banks in the US that banks crypto companies.
Thank you, Rebecca. Peter.
All right. Hi, I'm Peter. Also, thanks for being here. Really great event. Learned a lot today. So I'm Peter. I'm co-founder and CTO at Unstoppable Finance, and we built a product called Ultimate. And our mission is to bring DeFi to the masses. So how do we do that? So we are developers of one of these unhosted or non-custodial wallets, but we build it in a way that it's super easy for customers to use it. And especially we integrate protocols directly into our app. Also after curating it, so we published a curation framework, so to kind of, like Rebecca said, to find the blue chips in the space, and then to integrate them and make it really easy to invest into DeFi. So beside that, so we say DeFi to the masses. This needs three pillars. So the one is the product. It needs to be really easy and accessible. The second thing is education. So we talk a lot to journalists and mainstream media, especially in Germany where we're coming from. So there's like a mixed perception of crypto. So still there's like these thoughts of it's only used by criminals, which is objectively not true. So we really go into the discussions and also want to hear kind of like the criticism, because we really want to understand and also find solutions to it. And the third pillar is to involve in regulatory conversations, because DeFi can only hit the masses if all the rules that get introduced are the right ones, and that the rules don't kill the whole movement. So why do we believe in this movement? So maybe to add that to the introduction as well. Or maybe I do this later. I do this later. So what is my previous background? So I co-founded Solaris Bank, which is a banking as a platform company in Germany as a CTO, and built up Börse Stuttgart Digital Exchange, which is a MTF running under a German license. So therefore, I kind of came from TradFi through CeFi to DeFi, and therefore I'm able also to kind of like tell about regulation from the inside when building up companies.
Great. Mathieu?
So Mathieu Hardy, I'm Chief Development Officer at OSOM. We are a crypto wealth manager. If we need to put it in a regulatory box, that's a crypto asset service provider. And when it comes to DeFi, what we offer is an easy way for anyone to have a risk-minded approach to lending in DeFi. So we've heard earlier today that DeFi is clunky, no one wants to go and click on MetaMask, and it's complicated. And that is quite true for us privileged Europeans who have otherwise a good access to financial tools. What we do is that we allow you to buy tokenized lending position from different stable coins and in different protocols. So USDC, which we've heard about before, into Aave, which we're hearing about now, or DAI in Compound would be two examples. Without you having to do all of the transactions that would require, and also without you having to pay all the fees that would require, because if you want to put in 100 euros a month, by the time you've done 4 or 5 transactions to diversify the protocol and stablecoin issue of risk, you have no more money. So we do that in batches, and then because we are allowed to have you hold crypto assets and those positions are tokenized, we custody for you those tokenized position. It's an interesting stopgap. I definitely don't think it's the end game for DeFi. Definitely a way of making it accessible. Some call it the DeFi mullet, so it's DeFi in the front and TradFi in the back, but so kind of a different step between Ultimate Finance and Aave.
Peter.
Well, I'm Peter Kerstens. I'm advisor for digital finance at the European Commission's Finance Department, and our company sells Europe to the masses. We don't develop any protocol, but we do develop or try to develop policy and regulation to either enable or control digital finance, crypto finance, and we do that with mixed results.
True. Well, usually I start with a quote of a Nobel laureate. We had a discussion about with Peter. This time I want you to travel with me 180 years back. The Crimean War. It's a period that looks very similar to our period. Back then we had a prime minister in the UK, Palmerston, and this guy had a huge liability. He wanted not to be remembered as the guy who lost the Crimean War. So he took a decision of doing something that nobody else dared to do before him. He wanted to legalize the limited liability company. It was a tremendous innovation that only few who had access to the government were allowed to do it. And it was a disruptive innovation of how to organize business activities. Everybody was against it. The poor people were against it. They saw it as a scam. The rich people was against it because they thought that it brings competition. The church was against it. Adam Smith was against it. John Stuart Mill was against it. Even the Catholic Church was against it. And he said, I believe that this organizational structure is going to deliver huge value to the English people. So everyone has the right to open a limited liability company without the primal approval from the Parliament of England. Maybe we are in the moment in the European Union to explore a Palmerston time. Peter, in the conversation we had before, in the beginning of MiCA, when I asked you why DeFi is not in MiCA, you told me, be careful what you wish, Dimitrios. Can you please tell us, is this Palmerston moment here for European Union now for this innovation called decentralized finance?
Well, I'm not certain whether we have that, because your comparison is very good. Is that if you propose something or you promote something that vested interests are against, that usually is a sign that you're onto something. And we see the same with decentralized finance. Here in this room, there's a lot of enthusiasm about decentralized finance. But in the financial industry at large, you hear an awful lot of negative comments can't work, it's a scam, it doesn't operate. And also in the regulatory community, you have that because they say, well, look, all of this decentralized finance, it's probably going to end in tears. How can this work? It's against capitalism because who's going to become any better of this? And we don't have anyone to regulate because it's decentralized and we want people to regulate. So it depends a bit on your perspective. If you want to decentralize finance to truly develop towards its potential, maybe the best thing to do from a policy point of view is to do nothing at all, maybe. Unless the activity requires a framework, a regulatory framework to enable it. And that was a little bit sort of, if I go back to MiCA, the objective of MiCA was on the one hand to have investor protection and market integrity in crypto asset markets, but it was also to provide legal certainty because the industry at large said, look, we really need legal certainty for us to engage in this activity. So the question to me is that, does the decentralized finance ecosystem, does it require legal certainty? If it does, it will need a framework. If it says, no, we don't need any legal certainty, we are fine where we are, then maybe the best thing is not to do anything or not to do anything for the time being, because as soon as you start regulating, you start framing and also limiting and forcing kind of a dominant design approach onto something which is still in evolution.
I now want to go to the practitioners of this revolution, and I would like to ask, what is the value that actually decentralized finance brings into the today's market? What is the difference and what is the similarities between protocols working in the decentralized finance and to deliver on this promise? How much decentralization is necessary or how much decentralization is enough? I would like to start with Rebecca. What do you think, Rebecca?
Okay, so there are two questions, at least as far as I understood them. One, which is what's the value proposition? And two, if there's a value proposition here, what do we need to do to decentralize and how much decentralization is enough? So on the first, the value proposition, and I think your question sort of implicitly acknowledged this. I don't know if we've fully realized the value proposition of DeFi yet, but I do think there are a couple. One, which is continued innovation in the financial system. These are just new ways to interact, new financial primitives. I think another great benefit of DeFi is to have autonomy over your own financial well-being for the long term. Obviously, not everybody wants that, but for those people who do, and I think certainly in the next generation of participants in the economy, they do want to have their own individual autonomy over their own wealth management. And third is something that has been talked about with respect to blockchain for a long time, but I don't think has been fully realized yet, which is we know the traditional financial system has barriers to entry that will never be overcome. They've been systemic in a long time in excluding a large portion of the world population, and we will not be able to get over those barriers to entry. DeFi, if to Mr. Kerstens' point, stays at least true to how it's being built out today, has the ability to expand the economy in myriad ways that will never be able to be done with the traditional financial system, both by creating, as I said, new financial primitives, but also by allowing more people to be involved in the economy. I think that's partly true of just the Web3 ecosystem in general, right? To have a user-owned internet and different ways to interact with the internet will allow people to build out the economy in a broader way. The question is then how much decentralization is enough, but then you have to take one step back and ask, what does decentralization mean in the context of DeFi, right? You can have network or software decentralization. That's very important, right? Do you have open and permissionless software? If you don't, that's not decentralized. Do you have diffuse and distributed governance or decision-making systems? you need that to be decentralized. And the last piece of what you really need to be decentralized, which I think gets overlooked frequently, is the building out of the ecosystem in general. So if you have the original software developer continuing to be the primary driver of the ecosystem, I think, especially if we're going to talk about regulation, there are consumer protection issues with users of the software relying on the original software developer. How much decentralization is enough? The question is, for what? For it to not, I guess given that this is the BC4EU conference, the question should be, is how much decentralization is enough to be under the fully decentralized category in MiCA? And I think you have to make sure you tick all three boxes that I spoke about in a meaningful way, right? Technological, governance, ecosystem, or community, to really ensure that you are fully decentralized. And the last thing I'll say on the decentralization point is, in the traditional financial system, we've talked about custody being the hallmark for when you are a regulated entity, right? When you have custody and the ability to affect user assets, you get regulated in the traditional financial markets. In DeFi, because it is non-custodial, and if it's not non-custodial, it's definitely not DeFi. So because it's non-custodial, the hallmark needs to be something along the lines of more like control or perceived control of user assets. And so decentralization is critically important to ensure that there is not control over user assets.
Thank you, Rebecca. Peter, when you start building something, how you decide about how much decentralized activities you have?
Well, so I actually also would like to respond
sure.
to the previous question, and also to the very first one, because I was not surprised that the Catholic Church was against the example that you mentioned. But regarding the benefits of DeFi, I think really, so the main benefits that I see is, I think in human history we never had like a really 100% digital and really 100% real-time automated global financial service infrastructure. And I think that's the big opportunity now, kind of like from whatever Southern Chile, Africa, Europe to Japan, that we can build on top of like common standards. And on the one hand, having kind of let's say the payments and banking infrastructure in forms of like a blockchain as a transactional ledger, and financial services built on top with smart contracts. And I think this is like a huge opportunity to really serve the same services to like people globally and at a massive scale. The second thing, and this also refers a little bit to what Rebecca said. So what I personally think the most important thing in like being decentralized in DeFi or in this word is that the value chain is decentralized, because so in the tech lingo there's also this terminology of the money Legos, which in fact means that protocols or like DeFi services are building on top of each other. So there is a lending protocol which can kind of like can liquidate cryptocurrencies on a decentralized exchange, and this is like all 100% automized and integrated and using each other. And I think also, especially us who have worked in the traditional finance industry already, we need to remember, so how long did it take to introduce PSD2? How long did it take to really negotiate standards and really make it happen? And how good is the user experience for the customers? I think so we kind of skipped that part, and we have like open banking built inside with permissionless blockchains, smart contracts, and with DeFi. And I think that's at a global scale, and kind of like these standards develop along the way just by developers using it. And I think this is really a massive innovation, and also a wave of innovation that will carry along for a long while. And the third thing, also as policymakers are also in the house here, so what I think is a big opportunity when really giving full throttle on DeFi is that it can also solve the dilemma of the regulators in the future. So, for example, in Germany, where I'm coming from, we've seen 2 years ago this like the rise and fall of Wirecard. It's kind of probably the biggest financial scandal in Germany since I'm on Earth. And in the end, so why did it happen? So because like BaFin is not regulating hard enough. Well, I think like BaFin is already one of the, let's say, pretty solid regulators in Europe. And in the end, it happened because there were humans with criminal intention, and they were manipulating in the background. And I think there is almost no rule book that can really prevent anything that like a human wants to achieve to kind of like to undo this. Yeah, and with DeFi, kind of the financial service is 100% implemented in the smart contract. So in a tiny software program, this one is inspectable from outside for everyone, could also be inspectable by auditors or like professional auditors, regulators, and so on. It's fully transparent and even logging the data and the transactions on the blockchain. And so I really believe that there will be the next Wirecard and the next Wirecard, and financial scandals will happen all the time for the next decades. And the reactions in public will always be, we need to have more rules, we need to have more controls and stricter processes and so on and so forth. And this kind of like will go on, but we will still see the next scandals happening. From my point of view, to really break out of this vicious circle, we don't need more rules, we need more automation. And I think when we start building financial service infrastructure completely on smart contracts and open permissionless blockchains, I think I don't want to paint like everything like pink, yeah. So there's definitely challenges, but I think we need to see this opportunity that we can kind of fight, let's say, the enemy with more automation more effectively.
Mathieu, how the people perceive the value of decentralized finance, how you see this happening every day in your work, and how you communicate the decentralization value to the people. Are the people reluctant? How you manage the fear and the challenges that the consumer may have?
An interesting point is today, I think we're seeing a lot more uptake from in decentralized finance from people who don't come from such privileged places as we do, with relatively good money, relatively good banking, relatively good regulators. And so from our customers, which are mostly from Europe, there is a lot of questions around how safe it is, and also why do we always need to talk in US dollars? Because today, if you're looking at stable coins, it's been said many times, it's really hard to find, or so-called stable coins, really hard to find something that isn't dollar denominated. But once you explain how you can run an exchange like Uniswap, which trades an amazing amount of pairs, which is completely permissionless, and you explain that this is kind of basically doing what a stock exchange with 3,000 employees is doing, but with no one, it starts to click. And then the fact that most of finance is intermediated, and then at some point you can actually do stuff with your money, which you control, without the need for an intermediary, that's usually when people start to understand it might still be scary, but there is at least value there. And I think it would be interesting to undertake a study to see, given the promises of DeFi, if we were able to remove all the friction and intermediaries in our TradFi system, how much percentage point of GDP could we redeploy into actually useful stuff? And I think it goes to Peter's point as well, because if we don't look at decentralized finance more closely, we do risk going into this vicious circle of more and more compliance cost added onto a TradFi actor, which I think a lot of them are already finding it really expensive to operate. So going to machines that mathematically do, or it's mathematically provable that they do what they said they would do, and they can't cheat and they can't embezzle because it's not doable, is a very interesting path forward. When it comes to giving people assurance that DeFi or the DeFi protocols they're using is good, I appreciate Peter's remark from the beginning that maybe regulation, we're not so sure. And I think it's true that today it's young. Like DeFi is about 2 years old. Uniswap has gone from version 1 to version 3. Aave has gone from version 1 to version 3.
but we talked about NFTs earlier, and everyone references monkey pictures when talking about NFTs. But actually, Uniswap V3 liquidity position is an NFT. So if, because things move fast, someone says something about NFTs that doesn't work with how Uniswap tokenizes liquidity positions in non-fungible token, because it's a bit like wanting to regulate JPEGs or PDFs. It means nothing. It's just a text standard. We might be going a bit too fast. On the other hand, there is really nothing preventing regulators from, or at this point they wouldn't be regulated, but maybe certifiers, they would take it upon themselves to say, well, here's this public good that's running on a public good, which is a public blockchain, and maybe it would be a public good from us civil servants to just go and give our opinion about it. Today you have defisafety.com that gives you its opinion of whatever is available out there. Ultimate will do the curation. Maybe starting with that, like this one looks good, this one definitely doesn't, would be a good first step. Because you can't take them off the internet anyway. Like what's there?
Mathieu, if I want to handle a complaint or to place a complaint in a decentralized finance, purely decentralized finance organization, can I do it?
No, there is no one on the other side.
Wonderful. Peter, obviously, we have a very innovative approach to finance. Does this innovative approach and this organizational structure changes the financial risks? I mean, by definition, the financial regulation requires gatekeepers. And we have traditional concerns from handling a complaint, or this openness creates uncertainty of who is the qualified investor to all these products and services, and safety measures, and how we address market failures. What is your view of a good regime that could possibly keep the providers of the service disciplined in a certain set of rules? And is embedded supervision a possible solution for that?
Possibly, but if you look at risk in finance, be it centralized finance, decentralized finance, there are different categories of risk. There's market risk, there's counterparty risk or credit risk, there's market integrity risk, there's operational risk. Certain of these risks operate or translate differently in a decentralized environment than in a centralized environment. Certain of these risks may be lower, other of these risks may be higher. But the idea that because it's decentralized, there is no risk is wrong. Decentralized risk may be an invisible risk, and there's nothing more dangerous than invisible risk because you don't know where it is. But when the music stops playing and the risk surfaces, there are people holding that risk and they're facing a lot of losses. So you have to look at the different risk category, whether that risk is getting out of whack, out of proportion, and what, if anything, you can do to mitigate or address that risk. And then you have to depend on counterparty risk. Interesting. Well, in a decentralized environment, who is your counterparty? Is it the protocol? Is it the other people who are participating in that protocol? Because you need to know that, or you need to have a view on that before you can manage that risk. And you can either manage that risk by being careful in the positions you take, or you can try to manage that risk by having rules and regulations as to what is or is not permissible behavior. But the idea that decentralized finance is without risk because there is no intermediary that can defraud you or that can go bankrupt is, I think, a fallacy.
I would like to have the reflection of the other panelists on the points made by Peter. Rebecca.
Yeah, so a couple things I wanted to say. The way you phrased the question, you said, what are we going to do to regulate the providers of this software? But providers is such a strange word because it implies like a continuing activity, right? It's really what we're talking about is the people who built it and the coders. And if you go to a fully decentralized system, they're not providing it anymore. So that's something to think about. To Peter's point, I think there are many regulators out there who say things as they're trying to even talk about DeFi, same risk, same regulatory outcome. And I think that we have to go to, as Peter pointed out, different risks, but you can have the same, or they say same risk, same regulation. We can say different risks, same regulatory outcome. So, right, the largest set of buckets of risk are market integrity or financial stability, consumer protection, and AML-CFT. This can all be achieved, but it can't be achieved in the same way we do it for traditional financial intermediaries or in the traditional financial world. And if we try to impose those kinds of rules into this system, we are going to take away all the promise that this technology has. I think one of the main risks we have to think about how to address here is cyber risk. Because that's where a lot of the market integrity risk comes from, right? And we have to just, acknowledge the fact that there are hacks, or there are rug pulls, or there are vulnerabilities in software that lead to different issues in the software. And the question is, how do we do something like regulate cyber risk in a decentralized system? That's a very complex issue. And as Peter and I have talked about, how do you even impose this from a long-standing perspective? Are audits enough, right? Security audits. How do you really go about ensuring that the auditors are doing it right? Where does the liability exist? So trying to regulate DeFi is not something we're going to figure out today in the next 6 months or the next year. But I will say that all across the world, because I do work on this issue, both in the EU, but also in the UK and the US, people are trying to figure it out, but it is certainly not something we can fix today. And we have to be able to be flexible in our thinking over how regulation is really going to, come into play here.
What is your view, Mathieu, on this?
So also adding to those points, I think so we definitely need to identify kind of so where we can apply the same rules and where we can't. So like one pretty good example for myself is for example, in Germany, there's the BAIT, betriebliche Anforderungen an die IT, so which means like the minimum requirements to the IT, and kind of so when I provide a data center for banking, I need to let the auditors into the data center so that they can control whatever the fire systems and so on. And on the blockchain, it's very difficult. But on that note, that it's about operational resilience and business continuity management. So on the blockchain almost runs forever, mathematically provable, and kind of the operational resilience is achieved in a different way. And I think so the rules also from traditional IT compliance. So I personally perceive them most of the time as something really good to achieve, and I think where we can also marry both worlds, but there are really some things that are almost impossible to achieve, and I think that we really need to learn how we achieve what we want, because I think in the end we need to end up with principle-based regulation, because so if the goal of regulation is to protect customers, to have fair markets, to have operational resilience and market supervision and so on, in the end we can achieve those goals with different technical solutions, and I think we need to be very, very open to this. And for example, also to one point that Rebecca mentioned, so as hacks in protocols, as they're also like directly on the line. So like if there's a hack in a protocol, money is almost gone. So that's by far the biggest risk that we have here. So how could we solve that? So well, there could be solutions that also can come up from the community. Whatever we can create a DAO where we do like a liability umbrella between protocols, so that we can almost like achieve the same which we have in banking, or we could have like a circuit breaker. So like there's in traditional trading systems, there's circuit breakers everywhere. So to make sure that the markets don't go like through the bottom. So maybe we need to have like on-chain layer 1 circuit breakers to make sure that money is like in a certain circumstance not flooding out too fast, and so that there's potentially a way to react in the meanwhile. And the third thing, and that's referring to what Rebecca said, so as the IT audits and the security audits at the moment play a very important role, I think here we can also maybe do it slightly better than traditional finance, because I think auditors in traditional finance also play an important role. But so we've seen this a lot, that the auditing companies also have like consulting jobs, and they try to have a Chinese wall in between. But so it's, yeah, sometimes it's working good. So let's call it like that. And I think in this mindset of crypto, so where it's also a lot about like tokens and incentivation of people, we could create like auditing standards where the auditors also take kind of like a risk in what they do, kind of like, for example, taking a stake in the token that they are auditing, or that they get slashed if something goes wrong, so that it's kind of so that we really work with these incentivation mechanisms. And then again, so I think we need less rules and laws if we really work with economic incentivation mechanisms.
To the audit point, I think it's really important to understand that you need to audit. I like to call it PDF finance, which basically runs on PDFs and PDFs extract. You need to audit that all the time, because you might have internal rules, but the people might change and their behavior might change. And so even if they were honest year one, they might become dishonest year two. If you audit the protocol well enough and it's honest, then it will be forever if no one can go and mess with the code. So this is why regulators in TradFi, if you ask for a license or something, they'll rarely say yes and we endorse you and congratulations and go out into the world. They will just say, oh, we don't say no, you can go and practice. But they should be much more comfortable endorsing or actually attaching some sort of agreement to decentralized protocols, because then they will just run as intended. Sometimes it kind of doesn't work too well, but
I would say on this, audit plays an important role, at least in the current debate on decentralized finance and the auditing of protocols. But of course, if you do an audit, you need to have a standard against which you do the audit. And those standards sometimes exist, often they do not exist, so you've got nothing to measure against. Then the audit depends a bit on how good the auditor is, and what is the assurance you get from the auditor? Is the auditor just saying, well, look, this meets the standard, or does the auditor provide additional assurances above that? Because often what you see is that exploits, and they're reported almost on a daily basis, of DeFi protocols, is that these protocols met common standards, but the exploiters found a new weakness, or they found a way to manipulate the thing. Like the other day, there was in the news with the Mango hack. Sort of the smart contract performed as expected. It was a solid smart contract. But what happened with the hack was that they manipulated the oracle. And so they found a clever way in letting the smart contract do exactly what it was expected to do and pay out or give a loan for, what is it, $114 million?
yeah, they're about.
Of course, it costs the hackers about $5 million to manipulate the oracle, but in doing so, they did. So you have to look at the system-wide thing, is that how do these certain parts interact? And there was nothing wrong with the Mango protocol, and yet it got emptied of a lot of value. Peter?
Yeah, so I think for the space, I think what will be important really going forward is also to let's call it like self-regulation, or really coming up also with suggestions, because I think this. So I was referring to these German minimum standards in IT, and so there's also like they talk about whatever the role-right concept that I have in my IT infrastructure and so on and so forth. And it's like all these questions also appear when doing software development in a DAO, and there's somebody having like access to the main contracts and so on and so forth. And how do we manage this, and how do we distribute the keys and so on? And I think so to really set these minimum standards also inside the industry could be really a very easygoing practice to come up with with ideas and really match kind of like these minimum standards to our industry and do it the way we do this. But yeah, when it comes to the more professional audit, so that also Peter was referring to, in the end, so the like variety of potential hacks is pretty wide. So therefore, I think the space still is learning what is really possible, also on the exploit side. So therefore, I think we're still in the experimentation phase, but I think it's now important that we learn from the past and then also kind of create these let's say accepted standards. So how we test for security, how we test for like the different attack vectors, what frameworks we use also to reduce let's say programming failure and so on. Because I think in the end this all leads into much more stable services that we can provide, and in the end every customer and all the protocols and all the players in the market will benefit from that.
Well, we are close to the end of our panel, and I have two more questions. I would like to get your insight on both of them in a time-efficient way. My first question is, we have a lot of attempts out there to generate legal wrappers for DAOs. I'm aware of a program by Primavera de Filippi in Harvard and MIT. Recently, I read a fantastic paper of Chris Brummer on legal wrappers and how this can be helpful for decentralized protocols. I would like to have briefly your view about this approach to decentralized finance, starting with Rebecca.
So I think there are a couple of issues to grapple with. There are obviously benefits to having a legal wrapper around a DAO. Some of them are ability to contract, ability to operate in the real world or interact with the real world. And I think the other obvious benefit to having some form of legal wrapper around the DAO is the minimization of liability for individual DAO participants, which in the wake of the CFTC's action in the US, which I don't know how much of news of that has traveled to Europe, but there was an action by the CFTC, an enforcement action against the UKI DAO, which was previously the BZX DAO, for operating an illegal futures contract market or an FCM. And there was no legal wrapper around that DAO. So there are benefits to having legal wrapper around DAOs. But I do think two other points need to be made. One of which is, if you're putting a legal wrapper around a DAO, aren't you just creating some form of traditional legal structure that may operate a little differently or have a little bit of different governance mechanisms? And what does that mean? Are we just going sort of reverting back into a more traditional system? The other part of this, and this goes to the decentralization question you asked earlier, which is, should we be aiming towards governance minimization in the DeFi context, right? That goes really to decentralization, where software is much more autonomous, where you're not as reliant on the community for changes to be made to the protocol. It may make the protocol, it probably will make the protocol much more censorship resistant. But I think there have to be the benefits and the sort of drawbacks weighed when you're thinking about wrapping a DAO. I do think there are a lot of interesting structures that have been put together of late, which is, something like a Guernsey trust around a DAO. So, a much more novel structure around it. I don't think foundations, as much as people talk about them, actually wrap the DAOs. And I think having a foundation act at the behest of the DAO is very problematic from a liability perspective, both for the foundation and potentially for the DAO members. So I think there needs to be a lot of thought given to how we either wrap DAOs or whether we don't, and the kinds of structures we put together. But I also do really want to push people in the space to start thinking about governance minimization and how we can achieve that as well.
Yeah, maybe I would add to this. I think the core question. So, if we want to have a legal wrapper, from my point of view, it needs to be the right one. And so, from my perspective, well, I'm not a lawyer. I'm a techie. But from my perspective, like the right legal structure is not there yet. Not in Germany. Not in Europe. So maybe like a small stock trading company goes in the direction, or a society. But in the end, like what is a DAO? Like in a DAO, you have kind of liability, ownership, and governance. Kind of it's like a triad, right? And in the end, everything goes in line. So if I own like 10% of the token, I have like I'm like have 10% voting right, and potentially I could also take like 10% of the risk ? And I think this is like where the legal wrapper would come into play. So kind of most legal wrappers that I know have whatever a board or managing directors, and they have like an exposed kind of like liability, and in the end, so they take over kind of also like liability for like the rest of the company. And I think that's exactly not the case in a DAO. So because like everyone is almost equal, and kind of the amount of token then decides who's doing what. And I think so if we want to go that route, I think we need to invent like a digital society or something like that kind of like brings us close to this triad of having governance and ownership and liability going in line, and in the end then also being like able to incorporate in a digital way, and also working and employing people from all over the world.
Mathieu, is it really a big deal to have a legal wrapper as long as many decentralized protocols have admin keys and governance tokens that makes the project a little bit more centralized than what the people actually say it is?
Yeah, so I mean, if you have admin keys, whether you're decentralized is debatable. I think Rebecca's point of governance minimization is probably one of the most interesting. I really like liquidity in that regard, where it's there forever, and it can't be changed. That's super reassuring, as long as things go well. Other than that, I think this probably in the co-op world, co-ops should look more at DAOs, and DAOs should look more at co-op. But I'm not a lawyer either, and it's very different from country to country. So seeing that we only have 4 minutes left, I'd like to hear Peter's take on the same question.
Peter,
Well-
Peter, given that we have admin keys, governance tokens, and somebody can intervene to change the transactions that you as a supervisor want to have a clear view about, can you accept a decentralized protocol that does not have a legal wrap as a regulator?
Well, what I can accept doesn't really matter. It's sort of what society, what the legislator ultimately can accept. But if decentralized finance really is a paradigm shift, so if you think about finance, traditional finance, it's really an exercise in centralized account keeping. That's really what banks are all about. If you now move to a decentralized paradigm shift, that's interesting. If you want to regulate that, you also need to have a paradigm shift in your regulation. And what I've heard so far is really the projection of very traditional concepts and notions onto something which is a new paradigm. And that's probably for lack of a better idea. So a legal wrapper is fine, but it really is a kind of an adaptation of a traditional concept onto a new reality. And I think that will ultimately only get us so far. So we have to think much harder and much more imaginatively about how decentralized finance could be captured in legal concepts, if it is necessary. So assuming it is necessary, we will have to do a lot more thinking and be a lot more creative as to how to do that. And if we fail to be very creative, we'll end up not getting any further than applying adapted traditional concepts to this new reality. And that's always going to be sort of a halfway house. It's sort of not quite suitable. It's a bit sort of, what is it, the square peg in a round hole. If you knock hard enough, it'll fit, but it's not a great fit.
This is the last question I need to ask. Peter is very active in drafting regulations in the European Union. My organization, XREG, tries hard to develop regulatory frameworks that include DAO in jurisdictions all over the world. If you guys, as practitioners, can provide us with a few good recommendations for our regulatory guidance in the months, years to come, what you would suggest us to do, in which direction you would suggest us to move based on your experience and your passion on decentralized finance. I want to start with Mathieu.
So the first one, as I said at the beginning, would probably be to look a little longer and to try to understand the ins and outs, because indeed, square peg round hole, if we go back to my liquidity example, actually the protocol on chain does nothing. So the person who wrote the code didn't commit any crime, even under current regulation, because code written in a book.
So no liability to
So
the code.
the dev cannot have liability. Then one could argue that when you deploy it on chain, you start being liable, but in fact, nothing runs because it doesn't run until interacted with. The only point at which the smart contract starts to do anything is when you call its function and you ask it to do something. So in the end, it looks like the only person liable for anything is the one using it. And our current system doesn't have that, because we have, I think it's an MIT guy who said, finance today is the market for promises. So I give you something to take care of, and you promise to me that you'll return it when I need it. That doesn't, like, contracts don't make promises. So I agree, all the toolbox which we have today are kind of ill-suited to what we would need for tomorrow.
Peter, your best advice.
So I think I gave a lot of advices already. So my last one would be pointing again to this fact that so you can kind of like do static auditing, and then a financial service goes live and can't be changed anymore. And really to embrace that characteristic, because so if we like focus on kind of like these minimum standards for implementations and on the audits. I think the future of the regulator could be sitting in front of like a big dashboard and really supervising and watching markets in real time and kind of like seeing what's going on. Yeah, so I think we all need to push in that direction, because yeah, so like I said, so automation will help us in the future. Yeah.
Rebecca, advisors.
With parting words, I think the theme of this panel has really been that we can achieve what we want to be, but we need to be creative and thoughtful about it. I think there are a lot of great people, including the people on this panel, who are trying to be creative and thoughtful about whether and how we regulate DeFi, what that means, how we create this line of what's fully decentralized and what's partially decentralized, to go back to sort of the MiCA preamble. And I think we just have to be dedicated to doing that, because to sort of bring this full circle to the question of the promise of DeFi, there's a lot of good that can come out of DeFi and all sorts of Web3, user-owned internet types of software. And we just have to be dedicated to doing it, no matter how much pushback there is about this new paradigm that we're all building.
Mm-hmm. And I would like to conclude the panel with a direct question to Peter Kerstens. What should we expect from the European Commission in the coming 18 months? In the conclusions of MiCA, we have a promise that the European Commission will come up with some regulatory ideas, regulatory guidance, not necessarily regulation on DeFi. What should we expect from the side of the European Commission?
Well, it's not a promise, it's a request from the legislator to the Commission to think hard about this. And that's what we're going to do in the next 18 months. Now, us thinking hard in isolation in our office is not going to yield great outcomes. So if you want us to come up with great solutions, great ideas, do come and see us if you have great solutions. If you have bad solutions, we've got plenty of them ourselves, so you don't have to come and see us with bad ideas. But you have good ideas, do come and see us, because we are very interested. And if your ideas are really, really good, they may actually end up in the Commission's report.
Fantastic. Thank you very much for this wonderful panel. It was super informative. Thank you very much, Rebecca, for connecting from distance. Next time, we hope to have you here with us. Peter, thank you very much for your insight. Mathieu, your practical experience was very helpful. Peter, I'm still afraid of you, but this is something we are going to deal with in the future. Thank you very much, guys.